Yeah, hi. Good morning, everyone. On behalf of Equirus, I welcome you all on third quarter FY23 conference call of Rolex Rings. From the management side, we have Managing Director Mr. Manish Madeka and CFO Mr. Hiren Doshi. Without further ado, I hand over the call to Mr. Hiren Doshi for opening comments, post which we'll open for Q&A. Over to you, Hiren bhai.
Thank you, Mr. Asutosh. Good morning to all of you. Thankfully acknowledge your presence for update on the earnings or quarterly call for the quarter ended December 22. Hope my screen is visible.
Yes.
Okay. Straight away taking to the financial numbers and certain important parameters of financials. Ladies and gentlemen, would like to update that for the quarter ended December, that is Q3 of FY23. Pardon me, one typing error is there on Q2. It is basically number of Q3 FY23, which we recorded with 308 crore rupee revenue, which is the highest in a particular quarter till now. With compared to earlier quarter, it was September quarter was 290 odd crore. And having growth of 7% on Q1Q basis. In terms of EBITDA, we recorded 75.2 crore rupees EBITDA in the particular December quarter, and which was 69 crore in Q2 of FY23. In terms of percentage, it has marginally improved by 0.5%. Earlier it was 23.4, and by end of Q3, it is 23.9%. In terms of PBT, it was 49 crore in Q2. It has increased to 53 crore in Q3 of FY23. PAT, I'm sorry, it is PAT, and the PBT was earlier it was 60 crore, and it has increased to 65 odd crore in Q3 FY23. In terms of my revenue mix, broadly, it was same what we have a pattern of bearing rings and auto components. Bearing rings is somewhere about 50-53%, and auto components 47-49%, considering the only to this revenue. But overall revenue, considering my scrap and other income there, definitely bearing ring portion is more, that is somewhere about 53%, 54%. In terms of exports and domestic, as it is there, almost 60% we are touching to overseas revenue and 40% towards the domestic. Well, again, would like to update you that company is getting consistent new inquiry from the European as well as US market. No doubt the Europe market is a bit sluggish, and we are facing some kind of slowdown even from our existing customers from the Europe. But the company is trying to maintain, or rather to cope up with the addition of the new customer to the best possible extent, so that the revenue momentum will be what we have envisaged for this particular FY23. Down the line, next couple of quarters, we do not expect any significant turnaround from the European market. It would be more or less on the same line, and that is how we are expecting next fiscal is on the same line and having a growth of 15 to 18% or something like that on our annualized number of FY23. But looking to the inquiries and the programs, what has already been allotted, and we are expecting the same to be confirmed in the Q4 of this fiscal or in Q1 of the next fiscal. Definitely company is very much bullish for the FY25 and expecting growth more than 20-25% over the numbers of fiscal 24. At the same time, would like to tell you that the uncertainty in terms of raw material pricing, in terms of overseas ocean freight, container availability and all these things, company for the particularly last quarter, it has been almost stabilized, and we are getting back to pre-COVID level in terms of ocean freight, as well as the availability of containers, and the raw material pricing is more or less stabilized as of now. We do not expect much of the fluctuations in the couple of quarters. Would like to update that we were in process of installation of ground-mounted solar project, and out of that, 4 megawatt project has already been operationalized in last month, and the remaining 11.5 to 12 megawatt we are expecting somewhere in between March to April 23, which will give a significant benefit, particularly for the entire fiscal in next year. Would like to update that the operating cash flow is quite strong during the fiscal, and with that, company was able to reduce the short-term debt drastically, and long-term debt, as of now, it is almost on the verge of moving out of the balance sheet. As on 31st December, the long-term debt was hardly 12 crore rupees, which company is planning to pay off maybe by end of this fiscal. My revenue bifurcation, what we have been updated earlier also, that in between 40 to 44% that comes from the various passenger vehicle segments, 23% in the current fiscal, it is from the industrial and the commercial vehicle, heavy commercial vehicle, where company is gaining bit, and again further it would be strengthened, particularly in these three segments, rather industrial, CV, HCV, and hybrid vehicle. And in commercial vehicle HCV, we have reached to almost 29% of our revenue. We expect further it would be strong, and particularly in industrial segment, we are expecting a bit high in the current next fiscal. In terms of overall operational revenue, would like to update that for the 9 months, company has recorded 885 crore revenue, apart from the other income, that is interest and certain financial income, which earlier it was 1,016 crore for the FY22. We are almost on the same line what we have envisaged, and we would be able to touch the targets or the numbers what we have given or estimated for this FY23. In terms of EBITDA, the 9 months EBITDA, cumulative EBITDA is 215 crore, which was 240 crore for the entire year. In terms of percentage, as I was mentioning, it has gone up by 0.5%, 0.4 to 0.5%. PBT of the company for this 9 months, it is 186 crore, or vis-a-vis 194 crore for the entire fiscal. We can say we are behind hardly 5 to 6%, whereas my 25% of the remaining period is yet to come. And in terms of that, 152 crore we have recorded in 9 months, and which was 132 crore for the entire fiscal. Here, the benefit of taxation, or rather getting the new tax regime, is also factored here. In terms of operating cash flow, as I was mentioning, it has quite increased compared to previous fiscal. In FY22, my operating cash flow was somewhere about 59 crore, vis-a-vis in this first half it was 86 crore. But if I tell you, by end of December, for the 9 months, it has crossed 140 odd crores. Now this 140 crores have been used, maximum it has been used to reduce my working capital to the extent of 95 to 100 crores. Out of that, 30 odd crores something has been invested in various capex, including solar, and long-term debt has almost reduced by 13 crore. In terms of net debt, as on September half year, it was 166 crore. Let me tell you, and by end of December, this net debt figure is 87 crore. And again, in this 87 crore, 12 odd crores is the long-term debt which is outstanding, which company is planning to pay off by end of this fiscal. So we expect net debt equity yet to be strong in the last quarter. In terms of ROE, again, it has increased to 27% by September 23, and it is somewhere about 29.5% by 9 months of ended December 22. These are the detailed numbers of the operational numbers in terms of profit, P&L, and the balance sheet. Would like members to just go through in detail and let us have any query, any concerns in this regard. Would be happy to answer your queries. Session is open for Q&A. Thank you.
Thank you, Hiren sir, for the detailed opening remark. We would now like to open the floor for Q&A session. Anyone who has a question can use the raise your hand option. And once you are done asking a question, please use the lower your hand option. We'll wait for a couple of minutes for the question queue to assemble. Yeah. So we have our first question from Mr. Bhargav. Please unmute your line and ask your question. Bhargav, please unmute your line and ask your question. Yeah. As there is no response, we'll move on to Mr. Sonal. Please unmute your line and ask your question.
Yeah. Hi. Good morning, sir, and thanks for taking my question. Great to see you finally crossing the turnover of 300 crores a quarter for this quarter. So just wanted to, get some basic numbers first. So what were the product revenues for this quarter?
Product revenue is simply bearing ring, the O2 component only.
Yeah.
It was 287 crores. I'm not considering scrap. If you're adding scrap revenue, that is somewhere about 15.5 odd crore. So both put together, it was 302 crore rupees, 303 crore rupees.
And the other operating income would be?
That is hardly, this one export incentive to the extent of 4 crore. Windmill is somewhere about 1 crore.
Got it.
Put together is 308 crore with the other income of somewhere about 67 million.
Got it. And so, just in terms of the outlook, like you've mentioned that even though there are challenges in Europe, you are expecting a 15 to 18% growth for next year. So do you still see, you see sequentially we will continue to go up from this 300 crore sort of level?
Yeah, Mr. Sonal, looking to the, the program which has already been awarded and all of new customers from US with whom we were talking since from the very beginning of this fiscal. We expect them to be there on the board in the second quarter of next fiscal. And apart from that, the European new customers, what we have added, no doubt they have started a bit slow, but we expect some kind of additional volume from them. And beyond that, domestic market, particularly in the industrial segment and other segments, we are expecting additional inquiry or other additional lifting.
Got it, sir. Got it. So as of now, do you have visibility for, say, a 15% growth next year?
We are estimating that, looking to the numbers and the plan or projections, what our customers have indicated as of now.
Got it, sir. Okay, sir. Great. Thank you so much. I'll join back.
Thank you.
Yeah. We have our next question from Mr. Jehan. Please unmute your line and ask your question.
Yeah. Good morning, sir. The first question is on the raw material cost to sales. that percentage has declined quite a bit. It has been very stable at around 46-47% levels, but this quarter it was at almost 50-53% levels. So, what was the reason for such a sharp increase in the raw material cost to sales?
So there are various reasons towards that. The certain new components what we are developing, we are on the trial and stage of now. And even the product mix, what we are selling, having a better revenue. Sometimes it is not like that. Generally, it ranges at 46 to 47. Sometimes it got fluctuated in between 48 to 52%. And partially, as earlier also we were mentioning, that some time lag because of rate increase, rate decrease is yet to be passed on to the customer. So some recovery from my customers towards raw material that may come, or rather that will come in the first quarter, or rather the Q4 of FY23. So, but on an average, by and large, it would be in the ranging of 40 to 50% on an annual basis.
Okay. And another question is on the sales growth that you have guided for 15 to 18% growth next year, and FY25 growth should be 20 to 25%. So, can you explain why this, kind of relative slowdown in FY24 and then acceleration again in FY25?
See, the main reason is just because of certain European, yet they have European market, yet it has not been stabilized, and we are but not clear how my existing customer may further go down by 5 to 10%. Even we don't expect the quick restart from the our new customers. A couple of customers, what they were supposed to, lifting or rather they get supply from the last quarter, but yet they are starting in this month gradually. Again, the volume, what they have indicated, it has gone down. So that is how we are not expecting, or rather, at least for next couple of quarters, a quick recovery from the European market.
Right.
That will restrict to some extent.
Yeah. Okay. Thank you, sir.
Yeah.
Yeah. So I'll take questions from Mr. Bhargav from the chat. So first question is, how much of the new orders are from Europe?
Sorry?
How much of the new order wins are from Europe?
So to quantify, let me tell you, on an average, on a quarterly basis, from European market, we have almost 5 to 7 crore rupees, particularly in last couple of quarters. Average of 5 to 7 crore rupees in last 2 quarters. We expect same it to be maybe for Q4 as well as Q1 of next year. But definitely thereafter we expect it would be more than 10 to 12 crore.
Yes. And the second question is...
Hiren bhai, his question is like, what are orders we have won and we're forecasting the revenue in 25 and all. Roughly what percentage of those will be from Europe? If you can quantify, like order wins that has happened already, how much percentage could be from Europe of that? Maybe Manish bhai can state something on that.
Out of total quantum, or rather the growth, what we are expecting from there, we expect at least 20 to 25% would be coming from European market. That is our conservative expectation, if we are talking about 25 numbers.
Okay, Ashin, is there any other question in the chat?
Yeah, so there is a second question from Mr. Bhargav. So he's asking what is the current order book and how is the traction with Korean and German customers?
My current order book is ranging in between 105 to 115 crore rupees month-on-month basis. And the second portion of your question, can you please come again?
Yeah, so how is the traction with Korean and German customers?
Okay, I request my MD, Mr. Manish Madhika, to take up please this question. Sir, if you can. Sir, you are on mute.
See, I could not understand the question. What Korean and German?
What sort of traction? What sort of traction are we seeing from them, Korean and German customers?
See, Europe, as Hiren said, they are passing through recession. But we have added new customer from Europe and USA both. So at present, the sample submission activity is going on. And in automotive components, it takes always more than 6 months, 1 year to start the bulk supply. And that activity was started in second quarter and third quarter of this year. So from April onward, we are expecting some good, volume. Their initial volume, we will start supplying.
Sir, what they are also asking is, do we expect any competition from the Korean market?
No, from Korean market or, you see, in Europe, you all may be knowing that energy cost has gone up drastically. And now they are looking towards India or China for their sourcing. So at present we are getting lot of RFQ inquiries from Europe and USA. And out of that, one or two, this EV component for electrical vehicle, we have been nominated by one of the very big this transmission producer, USA. So looking to that, we are expecting 15 to 20% growth next year also. The Europe is already in recession, and whatever revenue we are getting now, they are passing through the recession, but by adding new customer, we have maintained that our revenue of 100 crore.
Yeah. Okay. Thank you, sir.
Yeah.
Yeah. Next question, please.
So yeah, our next question comes from Mr. Praveen. Please unmute your line and ask your question.
Yeah. Hi. Am I audible?
Yes.
Yes.
Yeah. Hi. Thanks for this opportunity. So just one question on the domestic front. If you can just help us to understand how is the demand in the domestic market, number one. Number two, since the Timken and Schaeffler both are expanding their capacity, so if you can just help us to understand any development on those front or any inquiries have started like from those lines.
We cannot give you the name of the customer, but
okay.
Recently we have been awarded a very big business from domestic customer for electrical vehicle. So now see the penetration of electric vehicle in India is all are very aggressive. So a good revenue we have been nominated for that particular component. And you know, railway, now in India, railway has increased their sourcing for this, their Vande Bharat train and that,
Wagon manufacturing business?
Yeah, wagon factory, yes.
Okay. So we are, expecting even the inquiries from the domestic customers and in terms of industrial segment as well as, one of the customer who in turn supply to Indian OEM who are very much aggressive as far as the passenger vehicle segment and all SUVs are there. So there also we have just recently been nominated for supplies to the Indian customer who is our existing customer, and they are expanding their activity towards that. And so we will be getting, or rather we are getting share into that. particularly from the other company who has just, recently down the line, before 6 months back, they have announced certain kind of capex, which they are in process, but it may take some more time, at least to 12 to 15 months from now. Once they will be finished out with their expansion, definitely we will be getting some chunk over there, because the kind of the product what they have announced and our facilities are very much suitable to produce such kind of components, as we are already supplying such kind of components to their existing plants also.
Okay. Thanks. Those were the two questions.
Yeah, we have our next question from Ms. Pooja. Please unmute your line and ask your question.
Hi, am I audible?
Yeah.
So the first question is on as raw material prices have softened, so what margin expansion are we expecting?
For this raw material fluctuation, it would not affect our margin, because raw material price increase and reduction both would be passing to the customers. So that will not be affected to our margin significantly. It is only the time lag between where we may got some kind of marginal hit or a gain.
Okay, any expectation on EBITDA number?
For?
EBITDA.
Yeah, EBITDA for which period, madam? For this
Sorry?
9 months number, it is almost touching 24%.
No, for FY24.
FY24, it would be more or less on the same line. It will go up definitely, because the solar what we have, we are in process, and that would be fully operationalized and available for the next fiscal. So we expect at least 5 to 6% of my current EBITDA to be increased, definitely.
Okay. Any capex plans and pipeline in coming years?
For the next fiscal, for the current fiscal, the remaining, the solar capex hardly to the extent of 3 to 5 odd crore. And the other machinery capex, as we have communicated earlier also, that we have ordered one forging line, looking to the new business what we have been awarded. And that equipment would be coming to us somewhere in November 23 or December 23. So that capex, including other my machining lines and maintenance capex, it would be somewhere about 40 to 45 crore in the next fiscal.
Okay. Thank you.
Yeah.
We have our next question from Mr. Nilesh. Please unmute your line and ask your question.
Yeah, hi. Am I audible?
Yes.
Yeah, hi. So I have a couple of questions. So one is, I observed that in your raw material breakup, there's been a overall, I think the change in stock is positive, and which is kind of which is a positive number that way, and which is kind of pull down your gross profit margins quite dramatically. Can you just explain that? And the second is also parallelly, I could see that the other expense component, which otherwise in the recent quarters has been inching up, that has also kind of gone down. So can you just explain the reasons for this?
See, first of all, the change in stock, that is obviously on the volume or rather the basis of the the future order, our production schedule. Definitely. Was on higher side. Hello.
So we couldn't hear you. At least I couldn't hear you for the last 10, 15 seconds.
Am I audible now?
Yes.
Yeah. Okay. What I was mentioning that the change in stock or rather increase, decrease, particularly semi-finished goods and finished goods. It is as per the production schedule what we have planned for this particular quarter and even for the next quarter. So obviously it depends on the the lead time what we are having for supplying to our customers. Earlier it was on a higher side because of container congestion and all these things, and now it has quickly moved. So definitely the inventory which was lying with us, it is nowadays on a lower days. So which has reduced my this change in stock. That is the one figure.
Okay.
And apart from that, the other expenses what you were mentioning, definitely the freight portion, ocean freight, which was on very much on a higher side, and it has been stabilized, particularly in last 2 to 2.5 months. So that also matters in my other expense. Apart from that, the certain other expenses, as the material commodity pricing has gone down, certain pricing of my other job work charges or some kind of consumers, that has also bit gone down. So that overall it has reduced my expenditure level.
And these, by and large, this cost structure may remain that way, assuming that the ocean freight doesn't shoot up. The rest of these are like sustainable.
Yes, but definitely, the chances of 3 to 5% deviation would be there. Because, sometimes wherever my new development, the new products which are under process, which are under development, definitely the certain consumption of certain material, stores, etc., it has gone up, which was very much or rather almost nil in the last quarter. So down the line, for these couple of second quarter of next fiscal, we do have certain planning for the product development, trial and runs are going on. So for that particular portion, it may go up.
Got it. And one last question again on a P&L line item itself is, though you mentioned that you have reduced the debt, but again,
Yes.
on a QOQ basis, the interest expense has gone up.
Here, the impact of, the restatement of foreign currency, that is because, it is somewhere about 16 million, which is accounted in 35 million of my overall cost. So my overall working capital cost is less than 2 crore on a quarterly basis. And again, you better know that we are using foreign currency working capital, whereas in a US dollar, the SOFR has bit increased. So that will also impact a bit.
Got it. And concurrently, other income, are there any offsetting things which also has been going up? Other income, we're noticing that
it will not be up, because other income also consisting certain kind of forex reinstatement of my debtors as well as my vendors restatement. So it would be maybe now. Earlier, for the last 2 quarters, the fluctuation of dollar euro is being increased, and we got benefited over there. But now the dollar is almost stabilized. Euro from last month onwards, it is almost stabilized. So we do not expect much of the gain from the foreign currency. So the last quarter number may bit lower than this 67 million.
Got it. Yeah, I think these were the questions from my side. Thanks a lot. I'll get back in the queue.
Thank you.
We have our next question from Mr. Harshil. Please unmute your line and ask your question.
Hello.
Yes, you're audible.
Hi, sir. Sir, I want to understand the basics of the rings industry, the outer ring. So, what is the industry size globally? What would be our market share, and how does a customer approach? How do we approach a customer? Like, do we our customers are Schaeffler, SKF, these customers, or how does it happen?
See, first of all, let me tell you, your first part of your question was how big bearing industry across the globe. Bearing industry is quite big, or even more than $60 billion, something like that. And bearings which are available or which are produced, say from a 20 mm diameter to 10,000 mm outer diameter kind of thing. But when it comes to Rolex is there into particular range of the product, which is say from a 50 mm diameter to 900 mm diameter kind of thing. That is bearing ring, what I'm talking about. And sorry, we don't know how big is the globally the bearing ring market is, because again, in a particular addressable segment where we are. But I can definitely tell you, in a domestic market, in a particular this range, and the bearings which are produced from the forging group, we have market share of somewhere about 35% odd. Later part of your question is how the customers are approaching and how we are, addressing them. Definitely, the Rolex is having the facility, state-of-art manufacturing facilities, 22 kind of different forging lines, and with the various value-added processes what we are offering. And the bearing giants across the globe, except Japanese and certain Korean manufacturers, all are very much aware what kind of capabilities Rolex is having and what kind of range of the products what we are able to produce. So accordingly, they are approaching, or rather through their sourcing office in India. Majority of the global players are there having their IP or rather the sourcing office in India, and their local officials are very much aware about these things, and they approach us, and the dialogues would be initiated, and this give us some kind of design drawing of the products, and we are just taking up further.
Okay. So to follow up on my previous question only, so how much, so we just make the outer rings of a bearing, correct?
Inner, outer, both.
Okay. And how much, so if we say if a bearing is 100 rupees, so both the rings contribute to how much of the cost of the bearing?
20 to 25%.
Okay. So basically, whatever will be the total bearing industry, ours will be 20 to 25% of the total.
Yeah. But that is the major chunk of my, overall cost of production of a bearing.
Okay.
Can I ask you to please join back the queue, as there are several participants waiting for their turn.
Okay.
We have our next question from a repeat question from Mr. Sonal. Please unmute your line and ask your question.
Yeah, hi. Thanks for taking my question again. Sir, just on this quarter's numbers, like somebody also asked that we've seen a sharp jump in RM cost while other expenses have gone down. So is there a reclassification, or this is, just some lead lag like you mentioned?
No. There is no reclassification, some kind of time lag. As well as I told you, the product mix.
Hello?
Sir, we are not able to hear you.
So could you repeat the answer, please?
Yeah. See, the main reason is just because of product mix. Am I audible?
Yes, sir.
Yeah. So the main reason for, increasing this thing is the product mix, and another portion is just because of time lag, something what I'm, expecting recovery from my overseas customer that would be there in the month of January, February.
Got it. So just because I'm asking this also because if we see our margins have been incredibly stable, right? Like 22% point something for the last 6 quarters. So is it a fair way to understand that we don't really have a lot of unexpected costs, etc., and it's a very stable business in that sense, despite the raw material cost inflation?
Raw material inflation, as we told you, that it is, definitely it affects our percentage. But apart from that, these kind of margins are very much expected if we have the same level of operations. And down the line, or rather the scale of economy, if it has gone up, definitely will be benefited. And any cost of production, any improvement in cost, like say, for example, electricity cost, what we are expecting to be reduced in the next fiscal. So straight away, it would be added to my EBITDA. And looking to our experience and this thing, more than 22% EBITDA is very much stable or rather at the current level of operations.
Right. And could you repeat the, I'm not clear. We should, roughly what portion of your power cost will now be solar, and when do you finally expect to commercialize this?
See, as I was mentioning, that 4 megawatt of my ground mounted solar, which is 25% of my total solar, what we are trying, it has already been operationalized in the last month, and remaining 11.5 to 12 megawatt, it would be what we are expecting somewhere in the month of April. So I would be having entire 15.5, 16 megawatt solar benefit in the next fiscal.
And that would be what, I mean, like what percentage of your sourcing will come from the solar?
See, out of my overall sourcing of power from a discom, it will reduce to the extent of 25 odd percentage.
25 odd. And just last question from my side in terms of like, because despite the challenging environment, you are guiding for fairly strong growth next year and even for the year after that. So do we see any major capex like next year because if you are going to go 15-20%, then by FY25, I think your capacity may be fully utilized or something, right?
Yeah, as we have communicated earlier also that we do have certain, spare capacity also available. Apart from that, we have ordered one forging line from Japan, which we are expecting to be installed in the third quarter of FY24. So that will definitely increase my capacity to the extent of 15 odd percentage, 15 to 20% of my existing level. And apart from that, value-added process equipments, what we are going to install. So that will definitely, it would be possible for me to achieve the numbers what we are expecting for FY24 as well as FY25. But we do not foresee any significant or big amount of capex. As I was mentioning, my capex numbers for this fiscal remaining maybe 5 to 7 odd crore something we are going to spend, and in next fiscal 40 to 45 crore will be able to help me to achieve these numbers.
Got it, sir. Great. Thank you so much. All the best.
Yeah.
We have our next question from Mr. Amit. Please unmute your line and ask your question.
Yeah, just one question from my end. The 7% QOQ top line growth that you have reported, is there any benefit from currency in terms of translation gains or something like that?
Not much in particularly, because as you have seen that for last couple of months, dollar, euro both are almost on the same line. And so there would be, on a euro front, it has increased. But unfortunately or fortunately, my euro contribution overall, my revenue to my revenue is very less. So I didn't have much, any of the significant appreciation in my top line.
So this QOQ top line growth is largely on account of increased volume of business?
Yes.
Okay.
And even the product, the product what we are selling, or rather the new products what we have developed, particularly in last 6 to 8 months, where the good amount of chunk has been dispatched. No doubt my existing production, or rather the existing product, it got some reduction, this thing. But certain high value or rather high value added products have also been supplied.
Okay, understood. Thanks.
Yeah, we have our next question from Mr. Mahesh. Please unmute your line and ask your question.
Hi, sir. Am I audible?
Yes.
Sir, just want to understand, I think half of our revenue comes from the international market, and freight cost is very important. So how do you approach, when do you enter into long-term contract for freight cost, or is it that?
No, we do not have any long-term contract. And that you need to consider a couple of things. First of all, out of my total exports, hardly 50% of those exports are what you say a CIF kind of terms, or including ocean freight, etc. Remaining is on FOB terms, so there would not be any impact on that. Apart from that, the freight cost, what it was there for before, 6-8 months back, and today it is quite stabilized. And it has gone down to almost touching to pre-COVID level. So will not have any impact over there.
No, I was just asking that, do we need to continue with this uncertainty
No, we didn't. You see, that was the particular phase, that was the particular period because of China, US, and there are other factors. But nowadays, for last couple of months or even 3 months, there is no issue as far as the availability of container, and the things have been released so that the rate have drastically reduced now. We do not expect any uncertainty over there, or maybe, this thing 5-7% plus minus would be there, but that will not be a significant.
Okay, sure. And sir, what will be the contribution from the top 3 customers in our sales?
If I'll say top 3 customer groups, it would be somewhere about 50 odd percentage. And when I say customer group, it is having various plants. One of my customer group having, we are supplying at their 7 plant across the globe, and all put together 7 plants, they are contributing somewhere about 25%. But for me, those are my 7 customers.
Joined call a bit late, but what is the capex plan for next 2 years?
Capex for the fiscal 24, it would be in the range of 40 to 45 crores. And for the FY25, again, considering to value-added processes and certain additional facilities requirement, maybe to the extent of 25 to 30 odd crores.
So this is a maintenance capex. We are not.
No, my maintenance capex is not this much. It is hardly in between, 7 to 10 odd crores, not more than that.
Okay, sure.
So here I'm considering both my new equipments as well as maintenance capex, and that's why I was telling that 40 to 45 crores something in the next fiscal, because we have ordered 1 forging line, which we are expecting somewhere in 3rd quarter of next fiscal.
Sure. Thank you so much, sir.
We have our next question from Mr. Nishan. Please unmute your line and ask your question.
Good morning. Good morning, sir. First of all, congratulations for a good set of numbers and record high revenue during the quarter. So my first question is related to revenue contribution coming from Europe and US on an annual basis or on a quarterly basis, if you can share.
I'm sorry, please come again.
I'm saying revenue contribution coming from Europe and US region.
Let me tell you, my 60% revenue comes from the overseas market, where the European continents are contributing somewhere about 15%, 15, of my overall revenue, and you can say 25% of my overseas revenue is being contributed by European continents as of now. It has gone down in particularly last 4 quarters from my existing customer, but in terms of numbers, we are more or less seeing what we had in previous year. That is because of adding new customers in European market.
And for US, likewise, numbers would be?
Europe, out of my 60% overall this thing, it is somewhere about 65 to 70% that is from US market. In terms of overall, you can say almost 38-40% of my revenue that comes from US region.
Okay, thank you, sir. And the second question is related to the margins. First, like you mentioned that in FY25 or from maybe post the 2nd quarter or 3rd quarter of FY24, we may see CV segment to see improvement in the revenue contribution. Likewise, industrial revenue contribution is also expected to increase. So, because of this change in the revenue segment, will there be increase in the margin because of this?
See, wherever the products carrying more value-added processes, the margins are a bit on higher side. So it is depending on the products what I'm going to supply and the quantum of that particular component. So definitely CV business, we are expecting much from the domestic market and even the industrial segment where we are expecting growth. But the margins, definitely, it is not because of the only product. It is also depends on the utilization of my capacity, which will give me push up over there. So once I'll have at least 10 to 15% more utilization or more revenue on a quarterly basis, definitely my margins would go up by at least what you say 1.5% of my current EBITDA level.
Sure, sir. And in case of other income, because last 2 quarters we have been witnessing that the other income is in the range of say 5 to 6 crore. If I'm not wrong, you have highlighted that that is mainly because of the forex related changes, and now the currencies have stabilized, so we may not see the similar kind of number going forward. Am I correct in that understanding, or
Yes. Yeah, definitely. But at the same time, I would like to add that, say, for the 9 months number, where I was stated 19 crore rupees by way of other income. Here, the major chunk is just the realized gain loss what we had. As I was mentioning that my working capital utilization has drastically gone down during this fiscal. And the forex portion, what we had an open, invoicing. So I'll be getting a dollar realization on a best rate, where my export rate was much on a lower side. So that fluctuation has gained me, and out of this 19 crore, what is there for the 9 months, these more than 60% is the realized number what we had. So coming to the quarterly numbers, 67 million, what it is there on December, definitely it will come down, because we do not expect much of the fluctuation in the last quarter of current fiscal.
Sure, sir. Thank you. I'll fall back in queue. Thank you.
We have our next question from Mr. Sandeep. Please unmute your line and ask your question.
Yeah. Hi. Good morning, sir.
Very good morning. Yeah, Sandeep.
Sandeep?
Hello, am I audible to you?
Yes.
Yeah, Sandeep.
Yeah. Hi. Sorry, I was on mute. Sir, one question is on the margin side. Just wanted some more clarification. Typically, our gross margins are in the range of 52 to 54%, and it came down to 47% this quarter, which you explained is a function of mix, but it should also normalize because there are some delayed price hikes also that you should get, and mix should also come back to where it was earlier. While your other expenditure, which largely consists of these freight costs going down and some benefit you'll get out of the solar plants that will get installed, are we talking of a material increase in margins in that case? Because that can lead to a 4 to 5 percentage point increase in margins if the same were to be true.
No, sir. We don't expect 4 to 5% straight away in the next fiscal, because there are certain fluctuations. I was mentioning that wherever the new development or rather the new product development is going on, definitely certain kind of expenditure level would definitely go up. And overall, my raw material margin, it is ranging in between 48 to 52%. So again, it depends on that kind of time lag. So there would be something even in the next quarter also, which may be pass it or recover it on the subsequent quarter. So we are expecting this because of solar and other operational efficiency. Definitely, to the extent of 1 to 1.5% additional, or rather the improvement in our EBITDA level for the next fiscal.
Okay. So was this 22% where we are in this queue? We should be somewhere about 24% odd in next financial year is what you're guiding.
Sir, if I'm not mistaken, my current EBITDA is more than 23% or touching to, particularly this quarter is touching to 23.5 or so. So we are expecting more than 23%. It would be stabilized, definitely.
Okay. All right. It's a different way we calculate, but understood. It should be similar to where it was. Got it. Second point was on just again clarification on top line guidance. We're guiding for 15% growth next year. I think in previous quarter we were guiding for 12 to 15%. So you're saying you should be on the higher end of this number, and then another 20 to 25% in FY25. Is that correct?
Yeah, definitely what we are expecting and looking to the current, the program status and the target dates, what my customers are indicating. So we are expecting somewhere about 15% growth in the next fiscal. Yeah.
And on the next point was on the tax rate. We are consistently around at 18-19% effective due to the unutilized MAT benefit. If you could just highlight how much of this unutilized benefit is there,
So
and
that has
approximately.
already been, that has already been used in the last fiscal, and in this current fiscal, my effective current tax rate you need to consider, which is my tax outflow, that would be 25%.
Okay. No, sir, but reported numbers are around 19%.
So that is a deferred tax,
Deferred.
the reversal of deferred tax, which is not having any impact on my inflow outflow.
Okay.
Yeah.
All
So
right,
my
fair
effect.
point.
Yeah.
Understood. And last point was on this some land monetization. I think we had guided that we'll be looking forward to do going forward. Any update on that? If you can just give it to us, please.
Status is what you say as it is, but we are looking for a good customer, or rather the good buyer for that particular piece of land, and we are inclined to liquidate that land parcel, but the current scenario of real estate market and the size of the particular land parcel, that is bit restricting, and we are again trying to move it off. But down the line, definitely we incline to liquidate. As of now, status is status quo, you can say.
Got it. All right. Thank you so much for taking this question.
We have a last question from Mr. Villan. Please unmute your line and ask the question.
Hello.
Yeah.
Thanks for the opportunity, sir. Sir, this might be covered, but just want to confirm, sir, any plans to bring down the debt level further, since we are not going to have any further major capex?
Yes, definitely. See, as I was mentioning that as on 31st December, my long-term debt was somewhere about 12 crore. Further, within the 1 month only, it has gone down by another 20% of that amount. And the working capital, again, what it was there in December, it has further reduced. And it is our continuous endeavor to reduce my entire debt, whether it is short-term, long-term, both.
So
And
sir,
as I was mentioning that long-term debt, we are planning to pay it off before March also.
So sir, our plan is to be debt-free by FY24 end? That should be
Yes,
okay.
sir, definitely.
Okay. And sir, just second question. Sir, in terms of the growth, sir, considering if the current global scenario remains the same, the probability of achieving 15 to 18% growth is fairly, I would say, high, right?
Yeah, definitely. See, I was telling that 15%, that is on the basis of the estimates, forecast schedule, and the indicative numbers given by my customers, or even with the new customers. That may prolong because of certain uncertainty, or maybe any, abnormal or adverse factors. Definitely it will affect, and we are part of overall economy, and particularly automobile and infrastructure industry. So something would be hampering over there. It will definitely affect me.
Understood, sir. Thanks a lot.
Yeah.
So that was the last question of the day. I would like to hand over the floor to Hiren sir for any closing remarks.
Thank you very much to all the participants. Hope we company are just satisfying your queries and concerns. And again, would like to tell that management is very much concentrated on the utilization of capacity and to continue with the momentum what we had in last 3 quarters. We are also envisaging that the overall revenue, what it has been estimated, it would be there in FY23 and looking better for the FY24 numbers. Thank you. Thanks a lot for joining.